Hi guys, welcome back to Investing Campus, and today we're going to talk about the difference between trend following and momentum. So if you read about systematic investing, you'll see the two words momentum and trend following used like they mean the same thing, but there is a real difference, and once you see it, you'll understand two of the most powerful and most heavily researched strategies in all of investing. So let's get into it. So here's the honest take. As strategy styles, they're basically the same. They just measure trends in two different ways. One judges a stock entirely on its own, whereas the other ranks it against every other stock in the market. The same raw ingredient, just a trend, but two different lenses. So let's explain the difference between them both. Both strategies make money from exactly one thing: price persistence, market trends. Not every stock, not all of the time, but some stocks, some of the time. And the key insight is this: once a trend is actually in place, it tends to persist long enough for you to get in, ride it, and then take a profit. And that's the entire engine of both. And neither one wins by being clever. They win the same boring way. They cut losses quickly and they let profits run. Lots of small losses and a handful of large gains. Add it up and you get positive expectancy. You make more on the trades that work than you give back on the ones that don't. We discussed this in previous videos. This is where most people go wrong. They chase accuracy by being right as often as possible, but trend and momentum genuinely don't care about how often you're right. They care about the win-loss ratio, how much you make when you win versus how much you lose when you're wrong. You can be right less than half of the time and still win comfortably over a large sample size. Let that sink in. So the question is, if they both share the same makeup and they're both fundamentally riding trends, what's the actual difference? It comes down to a single question: what do you compare the stock to? Start with the first lens. Judging a stock entirely on its own, that's trend following, or some people call it time series momentum. The question it asks is the individual stock trending? If it's a yes, you're in. If it rolls over, you're out. Nothing else enters the decision making, not the markets, not other stocks, just that one instrument and its own price. The technical name is either absolute momentum or time series momentum, but a lot of people in the industry just call it trend following. And the classic way the system is implemented is via a breakout. So you buy when price pushes through the upper band, and you ride the trend, and you exit when it breaks the trailing stop. So it's one instrument, one price, that's it. Whereas relative momentum is the other lens. Now, you don't judge the stock in isolation, you line it up against everything else. So say if you put two stocks side by side, one is ripping higher, one is bleeding lower. On its own, it's just a trend, but side by side, the relative momentum clearly favors the stronger stock. Now, if you scale that up, take a whole universe, say the 100 biggest stocks on your index, measure the momentum for every single stock, and then rank them. Strongest at the top, weakest at the bottom. And then the rule is almost insultingly simple. You buy the top 5, the top 10, for no other reason than they have the highest momentum right now. Then you rebalance on a schedule, weekly, monthly, quarterly, whatever you've tested. And here's the elegant part. As a stock's momentum fades, it slips down the ranking and gets replaced by stronger stocks coming up the rank. You don't manage it, the portfolio rotates itself. And this isn't folklore. Momentum is one of the most robustly documented effects in the whole of finance. Decades of academic research across countries, across asset classes, across time periods most of us have never lived through. And here's what it can look like in practice. But don't just judge it by its return. Look at the shape. A momentum system stays in the strongest names and crucially steps aside when the whole market rolls over. Have a closer look at the downside. The underwater curve is the drawdown. A momentum system takes regular small dips. That's the cost of doing business. But it can step aside the bigger ones, because when momentum disappears across the board, there's nothing left to rank, and the system simply switches to cash. In the worst bear markets in history, that's the difference between a minor flesh wound and absolute disaster. So two more things make it really powerful. First is it rotates between sectors automatically. You never have to predict the next hot sector. You get carried into it as it climbs the rankings. And second, it's completely systematic. No emotion, no forecasting, no opinion. You measure, you rank, and you rebalance. The rules decide, not your mood on a Monday morning. But remember guys, I'm not here to sell you the dream, so there is downside, and let's be honest about the trade-offs. In its favour, it's systematic and it's unemotional. The workload is tiny, minutes per month, and it plays defense by switching to cash. It rotates itself, and it trades rarely, so there's low cost and commission drag. And against it, psychologically, it's hard. You're buying strength, selling weakness, which is completely backwards. Every instinct says buy a bargain. It's also slow at turning points. It can never accurately predict an exact top or a bottom because it waits for the trend to actually turn. And depending on your holding periods, there can be tax friction depending on which jurisdiction you're in. So here's the whole thing in one breath. It's the same fundamental engine, but through two different lenses. Trend following, absolute or time series momentum, judges a stock alone. Is it trending? Whereas relative momentum ranks against a basket. Is this one stronger than the rest? Both are harvesting the same simple truth, that trends persist by cutting losses and letting winners run. If you want to go deeper, there are lots of books on trend following I can recommend. And if you enjoyed this video, please click and subscribe and check out the website Invest in Canvas. Thanks for watching, and I'll see you on the next one.